Okay. So, okay, back to the beginning. So Australia is a beautiful country with a diverse and multicultural population. It is a land of opportunities and offer a great lifestyle. However, before you make the move to Australia, it is essential to have a good understanding of the tax system and housing market. So today, the first speaker, Mr. Fabian, will be discussing the Australia housing market and rental system. Australia's housing market is one of the most demanded market in the world, and it can be daunting for new arrivals to navigate. We will be sharing the different types of properties available, the current trend and the buying of renting of property. We will also be discussing the rental market and the rights and responsibilities of tenants and landlords. And we have second speaker, Mr. Chun, will be discussing the Australian taxation system. Understanding the taxation system is critical to effectively manage your finances and plan for the future. We will be highlighting the various taxes that you need to be aware of. And also, we hope that you will find this webinar informative and helpful as you plan your settlement in Australia. Thank you for joining us today, and we look forward to an engaging and informative session. Before the webinar starts, allow me to give a quick introduction about GMS Global Migration Solutions before I pass the floor to our speaker. And let me share the screen now. Okay. So Global Migration Solutions is a licensed migration firm, and we specialize in helping individuals and families migrate to Australia, New Zealand, Europe, and the United States. Our core value are trust, simplicity, and commitment, which guide us in providing the right migration practices for our clients and stakeholders. With over 19 years of experience, we have assisted more than 12,000 families worldwide in successfully achieving their migration goals. We are also proud to announce that our founder and Managing Director, Mr. Desmond, was recognized with the top 25 global agency CEO. So from here, from the screen, you can see some of the partners visited in our office. And this one, just to share about the award that I mentioned just now, Mr. Desmond did recognize by U Global that he got this award started from top 100 in year 2018. Gradually, we move up to 50 in year 2019. And with customer support having us to push up to become one of the top 25 in year 2021 and 2022. And also today we have our partners and office in various countries located in Australia, Singapore, Malaysia, and also we have partners in Hong Kong, Vietnam, and Cambodia. Hi, Mr. Chun, welcome.
Hi.
And this is our program that we focus. We do have Australia, New Zealand, United States, and Portugal program. If you have any inquiry about the migration services, you need that. So you may contact us at inquiry@globalmigrationsolutions.com, or you can WhatsApp or call us at Malaysia country code 6010-229-2114. So now I pass the floor to our first speaker, Mr. Fabian. Welcome, Mr. Fabian.
Hello. I'm just going to share screen. Can everyone see the screen?
Yes.
Okay, that's great. Thanks again for inviting me to share a little bit about the housing market, and I will try to keep it as short as possible. Two topics that I'm mainly going to cover today is, first of all, is a guide to securing a rental property in Australia. So I think that's very, very important, especially for new migrants or someone who is planning to move to Australia. Most of the time you will need to find a rental property before you purchase a property, depending on where you're going to move into Australia, because it's very dependent. Second thing I'm going to talk about is maximizing your return on an Australian property investment at this current market, and if you wish to go into, and if that intention to go into it. And without further ado, I'll talk about the tips to help you secure your next rental property in the current competitive rental market. It is very hard. The market itself, especially for renting, it's at this current climate has been quite tough to secure a rental property. But hopefully after this few tips or after this session, you'll be able to understand a little better and prepare yourself to secure a rental property. So first of all, the first thing that you have to do when you try to rent a property in Australia is you would immediately jump into two websites. These two websites is called the realestate.com.au or the domain.com.au. So there is a selling button or buying button, buying button or renting button. So go to the renting button, you immediately be able to key in the location that you want and search for the type of properties that you're looking for. And from there, if you found a property that you think that you are keen on, click on the link and it will show you it will give you a button to potentially show you what is the inspection time. Click on the link and they will and to tell them that you want to register your interest to inspect the property and fill up all the information you can. Or if some of them they haven't have the viewing available, then you will have to wait or register and wait for them to contact you. If there is no inspection schedule and you haven't really heard back from them, you can obviously also contact them directly, email them or SMS message them. But in any case forward, if you are going to rent a property, it is pretty much a must that you have to inspect the property. So if you're not there physically, then I would say you probably can get a proxy or someone to inspect the property for you, because as a property manager, if we haven't met the tenant or a prospective applicant, chances of you being able to rent the property is pretty low. So step one is attend the inspection as soon as possible once it's ready, and that would help you to be able to get in the door. Second thing is when you inspect the property is to provide a positive impression. So obviously a friendly, a polite, presentable manner, so that the property manager can tell that, oh, okay, this is a proper applicant, proper tenant, or it shows a lot. Like if you dress properly, it really helps you in terms of giving a good impression to the property manager. So that would be the second tip. The third tip is when you are applying or you are registering for the property, it's important that you express or share with the property manager as much information as you can to the property manager in terms of why you actually like the particular property for rental. and from there you can say, for example, you can explain to them, how many family you have, how many people in the family, and where's your workplace, why do you want this, you particularly like this property. So all this information actually provide you a better understanding to the property manager so that they can pass it on to the landlord as well. So so if you have also the rental history and all the information, just provide it to them, because the more information you have, you provide to them, the chances of you being able to rent the property it be higher. The other tip that I would share is that when you apply for the property, say for example, once you've inspected the property, you're applying for the property through online, they will need all this information in order for them to approve your rental application. One of the main thing is the 100 points of ID. You need a passport, provide your driver's license. If you have a utility bill or previous utility bills or telephone bill, they also want to have a look at your 3 months latest pay slips and your 3 months bank statements. So before you rent the property, make sure you have all this information and you put every single thing down when you apply. This would help you to get in the door easier, because just to give you a scenario, most property managers handle about 100 to 120 properties in their portfolio. So me as a property manager, if I receive, say, 10 applicants and 5 applicants provided me with minimal information and they didn't provide me with the information such as the 100 ID point, but I have the other 5 which have provided me with all the information and as much information as possible, I would then be looking at this 5, and then I will narrow down this 10 prospective applicant, and I will then pass it to the landlord and say, oh, okay, well, out of 10, there's potentially 3 or 5 that you can look into, and let me know if these are the ones, and the other 5 would then be set aside because I don't have the information that I need. I'll probably be working on these 5 first. So if the landlord say, okay, I'm happy with this 5, then there you go. You've got and you want to be in this pool of 5 applicant. Unless the landlord says, oh, maybe this 5 is not that great. Can you see if there's any more? Then I'll be like, oh yeah, sure. I'll look at the other 5. Then I will start requesting information, requesting the information that I need from these other 5 applicants. So essentially, that's how the back end of the property manager, how it works. So if you can provide all this information to them when you apply for rental property, then the chances for you to be able to rent the particular property is higher. The other tip that I'll probably talk about is if you can write a cover letter, which is also good, because then it's kind of state to them that, oh, okay, well, if it summarized all the information that is required, then it will help in the rental application as well. And we also need to look at your references. So coming back to this seminar, is most of you are probably new migrants coming to the country. You probably would not have a previous rental record from your landlord or property manager. Then you can actually get a reference from, say, if you have a family friend or work manager or colleague that can put you up to writing a good references. That would be really helpful, because most property manager will definitely ask for a reference check just to make sure if you are a good paymaster. The last thing we want is to the property manager. The last thing the property wants is to have to take you to vacate or issue a notice to vacate and go through the whole process of not paying the rent. So that's why as a property manager, will always do their reference check. So if you can provide that, then it will also help. And the next thing is you have to prepare your finances. So you need to have a 1-month bond, and you also need to have at least 1 month rent, to 1 month rent in terms of renting a property. Of course, like I said, you have to have to. They have the property manager will have to look at your bank statement as well to see if you have the money to pay for the rent for the next 12 months. Most of the rental agreements are minimum 6 months to 12 months. Most of the property manager will take a 12-month lease over 6 months lease. So if you can run 12 months, and if you really like the property, you can also offer to pay, say, 3 months in advance. That would actually really help you, because then it will show to the landlord, oh, okay, this tenant is actually okay to pay upfront, and they have the financial capability to rent the place. So if you have to kind of get your finances sorted as well. Renting a place in Australia is very different to renting a place in other Singapore or Malaysia as well, because of the tight supply of rental. And lastly, in terms of a tip, would be you have to be responsive as soon as a property manager contacts you and asks for documents. You provide them as fast as possible. And if you do not hear from them, you can always be proactive and contact them and show that you are really keen. Most of the time, that would also help you, because there are many people applying for a property. So if you get in touch with the property manager, you build a relationship with them, there's a chance that you can push through a when you move, push through a rent to rent the place. If you do not hear from them, chances is that you probably move on and find another property, right? So I guess that sums up the guide to renting a property in Australia, be it in any city in Australia. I think the process is pretty much the same. And if you want to know the rules and regulation in terms of being a tenant as well, there's readily websites for tenant websites from government bodies that can help you in terms to know your rights and rules in terms of renting a property as well. Feel free to let me know, and if you want a service to help you look for a rental property, I am here to help you as well. We do offer that service. Say, for example, you are in your country and you want someone to do an inspection on your behalf and to rent a place on your behalf. We have such services. The second topic that I will talk about is actually the current market. How to maximize your investment in if you decide to look into Australian property. What's happening right now is actually to the news, or to a lot of people, is a housing crisis. But in my term, I would say that it is an opportunity to investors, especially overseas investors. One of the main key thing is the vacancy rates in Australia at this point is probably it is the lowest over the last 10 years. Which I will share with you in another slide. And there is a housing shortage. It has always been a housing shortage, but in years to come, it will still continue to have a bigger gap of housing shortage. The third point is there the increase in Australian mortgage interest rates has definitely dampened the demand, or dampen the selling of Australian properties. So so that would have slowed down as well. The fourth point would be a decrease in the purchasing power for local buyers or local investors. The liquidity for a local market has slowed down significantly as well, for various reasons. So if you look at this slide itself, it shows that this is from news.com.au, our normal Australian news. There is the Australia faces about 106,000 homes shortage by 2027. One of the main reasons is because there is a huge influx of migrants coming into Australia, and every year there's always migrants coming in, be it skill or investors. You, for example, will be coming to Australia in the next couple of years. And the other thing would be overseas students as well, coming to Australia to study. So that is also a very huge pool of people occupying the housing market. And the other thing that I'll probably talk about, which is the increase in interest rates. So of course, with the increase in interest rates, that would slow down the selling of the property. Developers will slow down in terms of developing new properties. The other thing that I'd probably talk about is, if you have a look at the news, the cost of construction has rise significantly. So and that also it's a two-way street. That also sent if you look at the news, the builders into liquidation. So that sort of dampen the supply of the market. And developers who has huge increase in cost, there's a gap between whether they can, even if with the increase in cost, they will have to then sell at a higher price. But with the economy being, not as great as, it's neither here nor there. So the developers will be thinking twice, well, if I build at this price, will I be able to sell at this price? And of course, they have bridging loan, high interest rates. So that would also set them to think whether should they be building right now or should they be building later when the market is getting better. So that again is housing shortage. For buyers, obviously they are very, very cautious in buying right now because of the interest rates, and also because of the economy being a little bit unstable, I would say. So they are worried if their job's gonna be a bit there for them. So for them to invest or to purchase another property other than the one that they're currently living in is something that they probably put on hold as well. Last, I'll probably talk about, because the point is banks. Banks is extremely cautious. They are tightening as well. So the borrowing power or the lending capacity to the market has reduced significantly. That is in Australia. I'm sure it's elsewhere in the world as well, but in Australia, yes, that's exactly what's happening. Talking about dwellings approved, to show you a chart, as at February 2023, there is about 12,661 dwellings being approved. But if you look at year on year, it's about negative 31% of change. So this is from the census, which is the government website. You can find it from the government website. Again, this is not going to show immediately, but it is a long-term effect because houses do not get built overnight. It takes time. especially in this country, there's a lot of rules and regulations, so things are fairly, there's a lengthy process towards it, even with building and dwellings being approved. This is the current interest rates in Australia. What you're looking at is if a local buyer is looking to purchase a property right now, 18 months ago, rates were around the 3% mark. But fast forward today, if you are a local Australian, if you want to buy a property, you'll be looking at 5 to 7%. That's pretty much a double jump in terms of lending, interest rate lending. That's how much a bank is charging right now for borrowing. What I'm showing is the reason I show it to you is because, of course, like I said, the bank is tightening liquidity. But as a foreigner, you can think of it as, okay, well, it's an opportunity because you're not only going to borrow from Australia, you can potentially borrow from Singapore, or you can potentially borrow from Malaysia. So there's different ways for you to finance your purchase. And borrowing from overseas doesn't mean you can't get your tax offset. I'm sure Chun can help you that as well. You can work your finances and you can get tax deduction as well from there. So this is what the current interest rate in Australia right now for a local investor or local buyer. The vacancy rates for Australia at the moment, for Melbourne in particular, is 1.41%. If I'm not mistaken, during COVID, the rental vacancy rate was around 3.3, 3.4. And now it's like essentially, and this is probably the lowest over the last 10 years. 10 years for Melbourne. Perth is 0.85, previously was 1 something, and Sydney is 1.7%. So it's very, very tight. So 100 houses, 1 property is empty or 2 properties unoccupied. That's how tight the vacancy is. That's why when I share to you the guide towards renting a property, it's very, very hard to rent a property especially for someone who doesn't have a record. It gets even harder. So the more information you can provide to them, it's important. Okay. The next thing I'll talk about is this is the current median price for a 2-bedroom apartment unit in Australia, in particularly in Melbourne. You'll be looking at a median price for $620,000. And again, this is a median price. And over the last 5 years, you've looked at the market's gone down, gone back up a little bit. So what I'm sharing with you right now is these properties are eventually slowly going to creep up, and it won't be this kind of mark anymore. It's going to continue to go up. What's happening right now is the apartment market, especially if you're looking at the apartment market, I can talk about the housing market, especially like houses, in another day. But the apartment market right now is, over the last 5-6 years, there was a huge influx of apartment, but lately the apartments has been slowly being snapped up. So there's not many new apartments left, and it's being purchased by investors as well, mainly because it's considered cheap right now because the construction price has gone up. So for a developer to build a new apartment right now, it will cost them more. So it makes sense for an investor to come in with the high rental yield. So currently, the median price for a 2-bedroom unit, you're looking at 600-ish, and it's probably going to go up further, even though the interest rate is high. But because of inflation and because of the high construction costs, that's not going to stay forever or for long as well. It's probably not going to go down as well. Okay. Rental snapshot. Because of the high interest rate, mortgage are high, tight vacancy, you're looking at 600 per week. That is actually quite conservative. our rental department for 2-bedroom, we are renting out at easily 750 per week. Over the last 12 months, you've seen it's about 40% growth in terms of the rental. It's probably going to stay that way as well, because if not, people who are not buying, they will essentially have to rent. So the rents probably going to stay high and continue to creep up. Yeah. So the other thing that people do when I coming back to maximizing output is that the short-term leasing market is a pretty big market in Australia as well. If you have a property, or if you're leasing an Airbnb property in the CBD, the occupancy rate, this is in Melbourne, so this is one of the property that we manage. You have close to 94% occupancy rate, and if you look at January onwards until April, which is a good 4 months, a client gets paid out $26,800 on just short-term leasing, Airbnb. So that's gross, of course. But yeah, another slide that shows you, this is in Dockland, a 1-bedroom, which has close to 100% occupancy rate. And January to April onwards, you have 22, you get the owner got paid out, the gross income that he's receiving is $22,000, $22,200. So that shows you the strength of, if you're looking to, that is the strength of the market in Australia at the moment. The next slide is just to show you a bit of the properties that we sell in Melbourne in particular. I operate in Melbourne predominantly. So a 2-bedroom, there are some available. There are apartments around the CBD that are completed that you can purchase very close to the university, or Victoria University, or RMIT University, walking distance to Queen Vic Market, with a car park, good sizing, with the facilities and amenities built by Italian builder, and the prices range from 689 to 1.1 million for a 2-bedroom. A 1-bedroom is $555,000. There are some incentives available as well. Or you can look at other apartments in Westside Place with full-fledged facilities close to the city. They are completed as well, ready to move in, ready to rent out, full-fledged facility. And the prices are ranging from $540,000 to $1.3 million. And they are, as an investor, there are financing available in your country, which is Singapore and Malaysia, which can loan you up to 70% and plus 5% financing your credit insurance legal valuation fee. And the interest rate is actually much lower than borrowing in Australia at the moment. You are essentially looking at 4.85% in terms of lending. So that's why I say, as an investor, I see it as an opportunity, because your income does not necessarily come from just Australia. So if you have intention to move to Australia and you're getting your PR, or you're potentially sending your kids or your wife here, it does make sense as for you to see as an opportunity to invest into the property market right now. You can rent it out short term or long term, or when you move here, you can even use it temporarily, because you never know where you're going to stay as well. So then you can save on the rent. And if your kids, and if you're not going to move, some of them like, oh, maybe I'll stay in my country for a while, my kids and my wife can stay for the moment, that can help as well. And so that's one of them. And the other thing that I'll probably talk about is, if you decide to move your family to Australia, chances of you having to purchase a property immediately by borrowing in Australia is very low, because you will have to find a job. And when you move yourself over here, you probably lose that solid income. Then you can't borrow to purchase a property. So think of it as, these are the steps before you move to Australia you can do while you are in your home country before moving. So then, secure property in Australia before you move here. So yeah, so that's pretty much sum up my my talk for today, my part. But if you have any questions with regards to the housing market, I can have a chat with Ashley, and we'll book an appointment to go through personally, and I'll run through what are the steps that I can help you with. Yep, that's it.
Yeah.
Thank you.
Thank you, Fabian, for the sharing. Now comes to our second presentation. Let's welcome Mr. Chun, and he'll be sharing on the Australian tax system. Hi, Mr. Chun.
Hi, Ashley.
Hi.
I'm just going to start sharing my screen. Okay. Right. I believe everyone should be able to see a big logo of mine, right? Okay. First of all, thank you to Global Migration Solutions and Ashley and the Desmond team to organize this event for us. So today, I'd like to talk about a bit more about Australian tax planning. So first of all, before I go into that, I guess in short, it feels to me, Fabian, you're like a recruitment consultant that people now needs to prepare CV and all those kind of things, and really for you to try to help them to find a property, which in a way you're like helping someone to find a job. So I think that's very interesting. So I definitely learned something from Fabian today.
Thank you.
All right, so coming into my slide, today I'll be focusing about Australian tax planning, and that is also very different from what a lot of people will see as a comparison to Malaysia as well. So first of all, a very, very quick introduction of myself. I'm sure there are some existing clients or people who have probably heard some of my presentation before, but for those who haven't met me, my name is Chun. I'm the founder and partner of Sandpoint. Professionally, I'm a qualified chartered accountant and also a certified practicing accountant in Australia. I'm also a registered tax agent with the Australian Taxation Office as well. So moving on, as a firm, we are a chartered accounting firm and a registered tax agent. Rules have changed, in fact, many, many years ago, and it's for the better in terms of consumer protection, because anyone who uses a non-registered tax agent, first of all, for the benefit of everyone, to be aware that whatever fees you're paying is actually not tax deductible at all. Number one. Number two, it's illegal for anyone who is not registered with the Australian Taxation Office to be giving tax advice. And that is really for the consumer benefit, because as a registered tax agent, we have to go through 40 hours of continuous professional development hours every single year, because the tax law do change a fair bit. And we just have to keep ourselves very updated with all the changes and so forth. As a firm, we've got 4 main areas of focus: tax and accounting, growth solutions, franchising solution, and outsourcing solutions. On a high level, in short, anyone who has any accounting, business, and taxation matter in Australia, we will be able to help, whether be it Western Australia, Melbourne, or Sydney. We can assist because we deal with Australia Taxation Office, which is the federal law. And taxes in the whole of Australia is the same. So tax and accounting, obviously, this is where it's important. We do the tax planning, structuring, and obviously compliance in terms of preparation of tax returns, GST, and so forth. Growth solutions, that is for our local clients, people who run their small, medium enterprises in Australia. as well. This is where we help our clients to grow their business and to make sure they pretty much maximize what they need to maximize. Franchising solutions is for clients and especially new migrants coming into a new environment. You're not exactly sure what are the things that you want to do, and to set up a brand new business as well. Sometimes naturally, it can be a bit more daunting because you don't have your standard operating procedures, and your brand name might not be something that people are aware of. As comparison, if you run a McDonald's, people know McDonald's, people know KFC, and naturally people will flock to your business, and that really eliminates, in a way, the time to build a business. Australia, in fact, is one of the most franchised country in the world. There's a lot of franchise here, but at the same time, you also have to be really, really careful because not ensuring that you don't purchase into the wrong franchise as well. Just like all things, there are going to be good franchisor and bad franchisor. This is where we can help our client to do the due diligence, the franchise business you're buying into, just to make sure that you're not overpaying and the brand that you're buying into is actually something that you can work with as well. Outsourcing solutions, this is where we help our client, in short, to that our client can fully outsource their accounting function to us, that they don't need to have an in-house accountant anymore. That's in fact very, I would use the word very crucial, very important for a lot of our SME clients, because the reality is it's very, I would use the word, number one, to hire a professional accountant in Australia is expensive. Number two, if you only have one person doing the job, then you're going to face with different challenges in terms of, number one, retention. Number two, if they are sick or whatnot, things doesn't get moving and so forth. So for us, we are here to essentially ensure that process is taken away so that you can focus on growing your business. So some of the, I guess, key function that we can help outsourcing, provide outsourcing to our clients is trust accounting. Just to quickly mention, we deal with a lot of, I guess, professional in the property industry. Example, Phoebe is one of the professionals that we work with very closely in terms of being the property manager and so forth. So for every property manager or property sales agent or even lawyers as well, you have what we call a trust account that needs to be maintained. I won't go into that in too much details today. So moving on. All businesses, SME, you need to have your proper bookkeeping and accounting. That's what we can do for our clients. You're going to have receivables, payable, payroll, and superannuation. We will help you to comply with all this so that you don't have to worry about, paying and when, what you need to do with comply in terms of the pay slip and so forth, and even when you need to pay superannuation. Superannuation is equivalent of EPF in Malaysia. For I guess clients in other countries is what you call your Singapore, it will be called CPF, and if I remember correctly, Hong Kong should be called MPF. We can also help our client to provide the CFO and virtual CFO services to them as well, so that they, as I said, they essentially do not need to have an in-house accountant, that we can pretty much do everything as it needs to be done. So some of the really key advantages is expert knowledge. We obviously deal with a lot of these day in, day out, and I can assure you, because in the past, we deal with, before some of our clients fully outsourced their accounting function to us, they were struggling, and frankly speaking, even some of their in-house accountant, as a comparison, they will not have the same level of expertise and exposure as us, because at the end of the day, we are an accounting firm. The experience that we have obviously do have a lot of clients with different challenges and whatnot, that we have the experience to solve the problem for our clients. As a business owner, you want to be focusing on your growing your business. You don't want to be worried about, when your accountant is going away, or if they have resigned, you're going to find someone to replace them, or if they go on holidays to wherever they're going, then you'll also be stuck in a way, because you still got to pay your suppliers and all those kind of things as well. And who's going to do it? Also, there's going to be significant cost saving as well. Just to give you all a very simple example, employing a qualified accountant, depending on the level of experience, it will easily cost the business owner 70 to 80,000 Australian dollar. And you know, depending on clients and what we do for them, the outsourcing bit, frankly speaking, it can cost 20 to 30,000 dollars. Just on a high level itself, you would already save at least 30 to 40,000 dollars as well, and less problem. So that's something that is quite important, and especially for I guess new migrants or new business owners is migrating. This is one of the things which is very, very important. So moving on as well, I want to quickly touch on what is tax residency. Do you have the right structure in terms of operating your business in Australia? I'll elaborate slightly a bit more what tax planning really is. What are some of the common mistakes we see, I guess, new migrants are making? And then I'll share a simple case study with everyone as well, and the process of engaging our firm. So first of all, what is your tax residency status? Are you a tax resident or a foreign resident? We obviously work very, very closely with the Global Migration Solutions team in regards to for their client, and obviously they will be able to help you to get your permanent residency. Obviously, some of it will be temporary residency as well as a start before you get converted. Now, it is very, very common. People get slightly confused to say, oh, you know, I have got my PR, but I have not migrated. But then, oh, because I've got my PR, therefore I'm a tax resident. Now, in short, that is not the case. We obviously only practice in Australia. I don't want to talk about too much in terms of other jurisdiction, but I'm just going to share in regards to what I know, and you can probably Google this yourself as well. So as a simple example, in the US, in Canada, once you get your PR, you've got to be reporting tax in that country, in US or Canada, wherever you get your PR from. In Australia, the reality is no, you don't have to do that yet. And you are still considered in a way before you essentially move on, migrate, you can still be considered as a foreign resident. Now, the tax office, in short, use its own rules to determine whether you are a tax resident or a foreign resident. One of it is called the resides test. Then you have the domicile test. You've got a 183 days test, and you've got what we call a superannuation test. Now, first of all, I want to highlight the fact the tax residency rule is extremely technical and extremely complicated. Frankly speaking, we can definitely assist. It's not a 5-minute conversation for clients most of the time, and it's very, very subjective as well. So you really, really need to have someone who knows this rule very, very clearly and make sure you seek the right advice. Now, out of these 4 tests that the Australian Taxation Office look at, the 183 days test is the one that I can tell you right now attract 100% of my clients' eye and say, oh, you know, Chun, I'm safe. I'm in the country less than 183 days. Therefore, I am a foreign resident. Now, and also, the reality is we are very, very creative at time, and sometimes clients say, hey, you know, I beat the tax office. I was in the country for 180 days. Therefore, I'm a foreigner. Now, the reality is it's not as simple as that. I will assure you, if it's as simple as that, I will not be a tax resident. And I'm sure Fabian will not be a tax resident as well because of that. Okay. Now, I just want to quickly highlight what is the resides test. So first of all, the tax office look at your physical presence, what's your intention, what's your purpose, what's your family association, and what's your business and employment ties in Australia, okay? Now, whatever rules that I've just spoken about has nothing to do with the immigration department. Immigration department and the Australian Taxation Office are two separate departments. But this is where it's actually for your benefit, because we have clients who, before they migrate, but they've got their PR, which means that you don't have to, you're not a tax resident. Now, I'm going to highlight what is the key difference between a tax resident and a non-tax resident in a moment. Excuse me. As a tax resident, we in Australia, unfortunately, we do have worldwide tax. So the big mansion in the middle of in the middle of KLCC probably belongs to Fabian. So he has to report his whatever rental income that he's receiving from the property that I guess as a tax resident we have outside of Australia to the Australian Taxation Office. As a foreign resident, you do not have taxable, your income is not taxable worldwide. Like what was mentioned earlier, when you invest in Australia, let's say as just a pure investor, you will be classified as a foreign investor. You only need to report your Australian taxation matters only. You do not need to report your income that you're deriving outside of Australia. Okay. Now, I want to quickly talk about what are some of the structure in Australia, just for the benefit of everyone. Naturally, individual, we can run a business using our individual name, but frankly speaking, it's something that we strongly, 99.99% of the time, discourage clients because of various reasons, including asset protection as well. Don't forget, the Australian, at the end of the day, is a much more litigative environment as well. In that sense, you know, people like to sue each other for whatever reason. You know, this is why, you know, the lawyers is making a lot of money in that sense, fortunately for them. So in regards to moving on then, in Australia, we have what we call a trust structure. One of the things that which is quite common, you might have heard of it before, is something what we call the discretionary, or sometimes it's also known as family trust. You also have unit trust as well. And then you've got a company structure set up. You've got what we call a self-managed superannuation fund as well. Obviously, you've got other things like a partnership and joint venture and all those kind of things, which is also can be a structure that you can use to own your business too. Okay. Now, moving on, and this is extremely important, is do I have the right structure? Now, I'm talking about the Australian environment. A lot of times people have this misconception to say, oh, you know, I'm just going to make it a relatively simple. I'll restructure it in the future without any tax implication because the company, the control remains the same. Example, someone start a business today under their individual name, then they say, oh, you know, 2 years later or 3 years later, then they say, oh, I'm going to restructure it to a company. No tax implication because I am still the owner, is really from me as an individual and to go into a company that I own. So there's no tax implication. The reality is no. Restructuring means you have a legal change of ownership from a tax and legal perspective, and there will be tax implication. This is very, very important. We always tell our client, you have to get your structure correct if you want to pay less tax eventually, okay? And it's very, very important. So first of all, what does tax planning really, really mean? Now, number one, in Australia, you got to understand, first of all, tax planning is legal. It is your right to arrange your financial matter to keep your tax to a minimum. Okay, that is your legal right. It is legitimate when you do it, obviously, within the boundary of the law. Okay. For anyone who is deciding when they want to migrate, I would really say to them, once you decided, oh, I'm going to migrate, I'm speaking to global migration right now, I've decided that I'm going to migrate. This is where, in my opinion, you really need to start to do your tax planning. And that is very, very important, because especially for clients who have potentially who have a lot of assets outside of Australia, you need to get those structuring well understood as well. And if you need to do any restructuring, it should be done earlier. And also, if you are thinking of some clients may think of, I'm going to dispose certain property as well, it needs to be well considered into the well planned. And this is something that we can definitely I would use to offer this advice and solution to the clients based on their scenario. So in simple terms, our approach when it comes to tax planning is we need to understand your scenario. You've got to also take note of this very specifically, because we see that happening a lot as well. You've got a good friend who is thinking of migrating, and then they might set up whatever they set up. And then you say, oh, you know, because my friend is doing it, he's my best friend, I'm just going to follow what he does. Bad decision. Okay. Everyone have their own scenario. Everyone's situation will be different, and so forth. So do not use other people's situation and use it as a template and say, oh, my friend is doing that, I'm just going to follow him because he's doing that, so it has to be correct, right? The reality is no. For all our clients, we need to understand your scenario. We then will offer a customized solution and advice based on your scenario. And then we strongly suggest client to revisit it every 2 years as a minimum, or as required. Now, I use the term as required as well because it's important. The reality is why, because for a moment you say, oh, you know, I've already bought, just for pure discussion, I'm running my very successful business. I'm using whatever I'm using. I've got already 5 investment property. I'm going to buy more. Then you say, oh, you know, I'm just going to buy it or whatsoever without approaching us. Now, the reality is no, whenever you buy any significant investment asset, definitely speak to us, because we will then plan to make sure we can legitimately minimize your tax. So some of the very common mistake we see clients, especially new migrants, is they migrated and they don't do any tax planning. And trust me, I'll tell right now, after people speaking to us when they have migrated, 100% of them always say, you know, Chun, I should have spoken to you much earlier. And that is a fact. Some migrants have migrated and then they start to plan, essentially. Sometimes they say, hey, you know, Chun, I've landed on Melbourne, let's have coffee. They will say, oh, where are you? They say, oh, you know, I've migrated already. And then now I'm in Melbourne, we need to talk and so forth. Look, the reality is we prefer not to. We will prefer to have the conversation much earlier, because when we have more, I would use the word time to plan your matters, the more we can do, essentially. And that is extremely crucial for us to have an effective plan. Now, I want to share this scenario with everyone that is attending this webinar today. One of our clients, many years ago, he operated a very successful business in Hong Kong, but then his family migrated to Australia because the kids were studying, and naturally, the wife and the 2 kids migrated. He will transfer money for to the family for their living expenses. So over the 2 to 3 years, he has transfer approximately $300,000 Australian. So one fine day, 2-3 years later, the tax office sent my client a letter and say, I'm going to audit you because I don't see you reporting your foreign income in Australia. And the tax office is essentially referring to the $300,000 was transferred across into Australia. And essentially, I will use the word alleging that my client has not declared his income. Now, fortunately for this client, because he approached us many years ago before he migrated, so we have developed a plan for him, naturally based on his situation, to really legally planning and minimizing his tax. So the final outcome that we had, the audit was closed. The client was determined as a foreign resident. This is important. Why? Because my client still run a very successful business in Hong Kong. As a tax resident, he needs to be, if he was determined as a tax resident, he would have to be reporting all his income outside of Australia, which means all his business income in Hong Kong to the Australian Taxation Office. Because by doing the planning correctly, and we did the planning before all this happened, we were able to implement strategy to allow him to achieve this outcome. And that was crucial. Naturally, the client was very happy because the reality is, we do want to pay tax as less as possible in a legal manner. So the key learning in this instance is planning is absolutely crucial in that sense, because I also want to highlight to everyone, we are an accountant. We are an accountant. I'm not a magician. I do not have a time machine. I can't travel back time to unwind certain things or to do certain things as well. So you have to be very conscious of this fact. So naturally, it's our goal at some point to plan our clients' taxation matters to make sure it's legally minimized so that the tax office will not be able to challenge you. So the process of engaging us is very simple. We do engagement scoping with our client, and that means we'll speak to you, understand what are your needs and your requirements. And then once we do that, we understand, we'll give you a quotation. Our quotation is no obligation, no commitment, but we want to be able to do that because everyone's situation is different and we want to be able to provide a customized quotation. Once the client accepts our quotation, then we will need the client's personal details because we are going to issue our engagement letter. So the engagement letter is going to state exactly what we're doing for you and what are the fees that we've quoted, just to prevent any miscommunication. And then once the client has signed and returned it to us, we will be able to act on their behalf and advise them accordingly. So a very quick recap. Tax residency in Australia is an extremely, I will use the word, technical component. We need to do proper planning. It's not as simple as just being in the country for less than 183 days because the government do have a lot of other things that they do look at. Structuring is important to have your structure correct if you want to pay less tax in the long term. So that's very, very important as well. If there's anything I can leave today without really having everyone remember is planning, planning, planning. I know Fabian is going to say location, location, location. I'm going to be saying planning, planning, and planning. And that is very, very important. There's this famous saying, failing to plan is planning to fail. And I totally agree with this in terms of the Australian taxation environment. Now, it's very, very hard to plan. I know there's a lot of uncertainty, but it's a process we need to consider when you want to legitimately minimizing your tax. So once again, thank you very, very much for your time. This is my name is Chun. These are my contact details. Feel free to drop me an email if there's anything you need in regards to clarification. And definitely, once again, I want to thank Global Migration. Thank you, Ashley, as well for organizing this. And obviously, thank you, Fabian, for sharing his lovely presentation as well. I learned a few things from him too. So I'm going to pass it back to you, Ashley.
Okay, thank you, Mr. Chun. Thanks for the sharing. So we have come to the end, and thank you for all to joining us today for this insightful webinar. So before we close, we would like to remind you that you can access the recording of this webinar via our YouTube channel, and we will send a link over to all of you. If you have any further questions, please feel free to reach out. So we will connect you with our partner, Fabian and Chun. So once again, thank you for attending, and thanks, Fabian and Chun. So have a great weekend, great day, everyone.
Thank you.
Okay,
Thank
bye.
you. Bye.
Bye.